Hey traders and investors, welcome to today's Steady Trader YouTube Live. Today we're going to talk about something from my process perspective. As you can imagine, with the market having been very volatile over the past few days, the question has come whether the 2018 stock market crash is finally over or when will it end? The very simple answer to you, quite frankly, and the honest answer, and anyone that tells you anything different is basically lying. I don't know. I don't know if the crash is over. What I do think is very likely is that 2018 is going to be significantly more volatile for the stock market than 2017 was. Now, if you want to go and sort of look at some of the public statements I've made on that, if you look at December in my YouTube channel in in December, you can see one of the themes is that I think 2018 is going to be significantly more volatile. So far, we're getting a bit of a taste of that. Now, I just got off the phone with our coaching clients and I made a video for our Clubhouse members, and we talked about three specific segments of the market that we still feel very comfortable in buying here from a structural perspective. So let's look at the three things that you need to ask yourself whether a stock market crash is over. Let me quickly switch this over so you guys can see this. So the three questions are very simple. Number one, has something fundamentally changed? Well, in my opinion, so far, nothing has fundamentally changed from an economic growth perspective. The only thing that has changed is interest rates have significantly ramped higher, and that is not to be discounted. But all else being equal from an economic growth perspective, the numbers are great, so nothing has changed here. So that's number one. Number two is technical levels of support. If you look at the S&P 500 here, very, very simply, all we've done so far is mean revert back to an area of previous support. We did it there, we did it here, we did it here, and so on and so forth. And so far, that's all we've done. We've come back to an area that has acted as support basically since late 2016, or I guess October 2016. And so that's been a very healthy move. That's also coinciding with that blue line on your screen, and that's our 100-day moving average right here. As you can see, that also held as support more often than not. We kind of undercut it and went to the 200 days, so that's possibly the next potential risk area. But right now, we're at a point where adding some risk exposure again does certainly have better reward to risk ratios than up here when we were vertical. That's number two. And number three is to give it some time. Okay, you have got to give these corrective periods some time. You can have one sector after another, one group of stocks after another start to bottom out. They're not all going to bottom out at the same time, but it's also very possible. In fact, it's quite likely even that we will see a retest of these lows at some point over the next days, potentially weeks. So give these things some time. Markets don't reward immediate gratification chasers. In fact, what markets do is they reward people who have a process and who are patient. And when it comes to the decision whether to allocate more money right now, it's not about freaking out and dumping positions into the lows or taking all sorts of risky trades on, which is unfortunately a lot of the commentary I've seen over the past 24, 48 hours or so on the public boards that we have. It's all about process. So to answer your question, whether the stock market crash 2018 is over, I would say yes. I think the majority of it is over, but you have got to give it time. That's point number three that we just talked about. Give it some time. One sector, one group after another is going to start getting less volatile, and as that starts to happen, you're going to start to see an ebbing out of this whole process. Again, it's not a time, in my opinion, to start blindly allocating crazy amounts of money, but the fundamentals have not changed as of yet. Okay, that's number one. We're at a technical area of much better reward to risk on the S&P 500 at least. And number three, let's give it some time. It's not a time to go blindly and buy stuff. It is a time to exercise patience and look for things that you've liked before. If there are things that you liked, 10, 15% higher just a few days ago, fundamentally, there should not be much reason why you wouldn't like it here at a much bigger discount to where it traded a while ago. And that's exactly those three parts of the market I shared with our Clubhouse members and coaching clients this morning that we liked before the market crash. We didn't buy them there because the market went vertical. but we like now, and they're all, just so you know, they're all growth-oriented parts of the market. So one of those things, for example, is large cap technology stocks. So you know. So I hope this is helpful, folks. If you like this, please give us a thumbs up or a comment down below, and we'll see you in the next YouTube Live.